create assets, build it up, lease it out, and then maybe at some point of time, if you have a critical mass, take it to a REIT or something like that. Because it's easy to just develop, sell, and move on, start our sales. Of course, it's a good number mover there, but there is a certain strategy to get a far better return in the long term.
Right.
So we restrict ourselves from selling the startup.
Okay. Sir, on the current quarter, the land purchase amount was, I think, among the lowest that we have seen recently, sub 700 crores. So is this the right number to look at now for the next, let's say, 4-5 quarters? Or
I will answer the earlier question. That's what I was mentioning, Abhinav, is around 800 to 850 crores is what we should look at per quarter. I'm not exactly telling, but year as a whole, if you look at maybe around 3,500 crores of spent towards the business development.
To sort of grow on what we are doing now in sales, right?
Considering the fact that we also do some JV KDs.
All right. Thank you, sir. All the best to the team.
No, thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone. The next question is from the line of Shivam, an individual investor. Please go ahead.
Hello. Yes, sir. As you mentioned that there will be plenty of launches in the next fiscal year. So can you just give us a breakup? Can you just give us a guidance of the pre-sales number that you are expecting for the next fiscal year?
Ideally, right now we are looking at this quarter, how we are going to end this financial year. The planning for the next fiscal starts as we end this financial year. Maybe it's too early to talk about FY25 guidance. Whatever the number that we're going to reach this year, we'll try and work towards how we can achieve and try and grow on those numbers.
And sir, any guidance on how much would be the top line we'll be expecting?
Not for FY25 just now.
You won't be able to give?
See, it's not about giving a random number. That kind of processes that we have, we need to sit with the heads of each of the cities and the verticals, look at their plan for each city and what we have in pipeline and what can get the approvals, which quarter what can get launched, and also sit with the sales team and how much of existing inventory we can sell off. And it will be a sum of parts of each city, each segment, new launches and completed and ongoing projects. Put together, we need to tell you that number. For the next year, we are not doing right now. We are looking at focuses on this quarter.
So the next year, you are majorly focusing that the Q1 will be having the highest number of launches?
Yes. We should be able to get a lot of projects which are underway for the approvals by then. So we will have a lot of launches.
And any number that you can give on the deliveries that we can expect of next fiscal year?
This fiscal year, so far we have delivered around 12 billion as of last quarter. And as I mentioned, last week we had 6 completions. That is also aggregating to... So overall, I think we'll end this year with 20 plus million square foot of completions.
Okay, sir. Thank you so much.
Thank you. We have a next question from the line of Kunal Lakhan from CLSA. Please go ahead.
Hi, good evening. Thanks for taking my question. So, when I look at our peer group of developers, we are selling more than others, but we have a relatively lower pipeline of projects compared to others. And when I look at some of the peers, despite having a sizable pipeline, are raising equity to acquire, more land, since they are seeing more, opportunities, attractive opportunities for acquisitions. Our approach seems to be slightly different. Are we seeing the opportunities differently here? Also, if you can, a follow-up on that would be would you look at raising equity to either, fund business development or capex for that matter?
Kunal, if you look at, that's what I was mentioning in the opening remarks, 180 million square feet of projects done in 30 years. And as we speak, just now we have ongoing and upcoming. Ongoing also acquired last couple of years only. And the under planning itself is 170 million square foot. I don't know which comparative developer that you are referring to. I'm not so sure ongoing and upcoming put together if people have got of this size and scale. But having said that, I mean, like for example, Bombay, if you take, after we did whatever the acquisitions, the first and primary focus was to launch those projects and see the traction and unlock the capital that we have deployed, and then churn the same capital to acquire few more projects. We have now not list to be launched. Otherwise, we've launched all the projects for which we have deployed the capital. Now, once that is done, we look at next leg of projects in Bombay in a different geographies, the different locations than what we are currently present. Same thing applies for each and every city, because there is no point in accumulating and buying so much. What we have, 53 million square foot, is not small. And the value of 53 million square foot is 42,000 crores. And we also have got at least 15 to 20 projects right now, large projects. Scale of the projects also has considerably increased. If you look at 26 projects are 53 million square foot. That means, and an average each project is 2 million square foot. So 15 to 20 projects across various geographies, various cities, due diligence is also happening. So be rest assured, the business development activity, acquisition of projects, either by way of through NCLT or ARC or acquisition directly from the private landowners, is robust, and we have a method to doing that, and that will not let the growth slow down.
Sure. I mean, I understand. I take your point in terms of the million square foot, but in terms of value terms, right? I mean, 57,000 of pipeline versus what we are selling already 20,000 this year, and of course that number will go up going ahead. So at no point in time will be short of projects, I'm assuming, that, in terms
I mentioned. So 42,000 crores of upcoming projects value, plus 16,000 crores of current inventory out of what we just launched. All put together nearing 60,000 crores. And not that we're not going to sign anything at all in month on month. So while answering earlier question, we said we are keeping aside 3,500 crores of money for the business development. So with that money, there will be a lot of acquisitions also that will happen. Chairman was mentioning while answering the earlier question, in NCR, we are signing up a large project, Prestige City. The top line of that project could be close to 10,000 crores.
Sure. And just on the same question, that in terms of would you look at raising equity for either funding debt or business development or capex or business development?
As of now, we don't have any plans as such. Mm-hmm. We will evaluate at that point in time. Maybe for you to know, during this board meeting, one of the discussion items in terms of monetization of assets was to evaluate, now that we've got close to 12 operating hotels and many keys are under construction in different cities, evaluate hospitality portfolio, whether is it right time to look at raising capital for that segment separately, monetize in some form or the other. There's a separate committee that's been set up which will evaluate, and based on the inputs given by that committee, whatever is the outcome, it will be put forth to the board in the next meeting. Accordingly, decision will be taken.
Sure, that's helpful. My second question was on our segment-wise metrics that we give. The margins and the ROCEs for the resi business, especially the margins, right, still they remain a bit lower than what we would expect at 19%. How should we look at this, this number going ahead, especially with the new projects coming in?
Driven by the nature of the projects that have come up for the recognition, but as you know, average realizations have considerably grown last year and this year. These projects have not yet come for revenue recognition. So once they start coming in, I think the margins will be sustainable and back on track.
So on the 32,000 crores of unrecognized revenues, what kind of margins do you think you can make?
The gross margins will be in the range of around 30%, 30 to 32%.
Sorry, I didn't get that.
30 to 32%.
30 to 32%. Okay, got it. All right, thank you. Those were my questions. Thank you and all the best.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phones now. We have a question from the line of Pritesh Sheth from Motilal Oswal. Please go ahead.
Yeah, thanks for the follow-up. Two bookkeeping questions. One is, debt which is sitting outside our books on the JV projects. What would that number be?
Between 4 different projects where we have partner, around 1,900 to 2,000 crores would be not coming for consolidation. Okay, and this is our share? This is total. Outside our share would be total. So if we have to consolidate, our share would be half.
Yeah. Okay. Got it. And secondly, just on other income, which we have seen a very healthy number since last 3-4 quarters. I understand, obviously some bit of it is due to, the REIT holding that we have. But on a quarter-on-quarter basis, what keeps that number, very high at around 170 odd crores? So what are the components to that?
The major component of other income is the REIT itself. It's around 90 to 100 crores. And apart from that, we have certain interest income and all that, which we collect on our refundable deposits and ICDs, what we have given to JV entities. So basically, these are the components of other income.
So REIT 90 to 100 crore would be the revaluation income or the rental income which is flowing to us?
It is basically the REIT units are listed. So as per the accounting standard, you have to mark to market every quarter based on the closing prices on that date. So 100 crores, including a dividend income, is 90 to 100 crores is what we have additionally upside during the quarter.
Sure. Okay. Got it. Thank you. That's it from my side.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to management for closing comments. Over to you, sir.
Thank you, everyone, for taking time out to be in this call and for a very interactive session. We are happy to provide further information that you may need to understand the company a lot more. We and with the management vision and the things that we have, we are continuing to work towards how we can grow and create value for all our stakeholders. Thank you and look forward to your continued support.
Thank you. Thank you for the participation. We enjoyed the interaction and I hope we were able to give you clarity. Thank you again.
Thank you, sir. On behalf of Axis Capital Limited, that concludes this conference. Thank you for joining us and you may now disconnect your lines.